Good morning, everyone, and welcome to At Home with Hayley. Today, and this lovely, well, not so lovely here in the UK, we have lots and lots of rain today, and we had lots of rain yesterday as well, but still beautiful summer's day with a bit of rain. We are here today to talk to you about all things property. We do have a little bit of a twist for you today as well. We have one of our power team members that is going to talk to you about their area of expertise and give you an update on their overview of the market right now as well. So very special treat for you there. But for those of you, I can see that there's actually quite a few of you that are new looking at the list here. Can I just ask you guys before I get started, can you hear me okay? If you can just pop in the chat box if you can hear me. Yes, brilliant. Thank you, guys. That's awesome. Today we're going to be, I will give you a short update. But before I do that, for those of you that don't know who I am, my name is Hayley Andrews. I am the co-founder of Your Freedom Empire, a mentor, trainer and coach, and a professional property investor. I've been in the industry for 18 years, and I've done everything from buy-to-lets, HMOs, straight through to large HMOs, 21, 22 bedroom HMOs, and commercial and development as well. So a bit of everything in there. Service accommodation also, so pretty much most strategies. So I'm here today. I'm going to give you a short update now. While I'm giving the update, guys, if you want to start popping your questions in the chat box, and then when we have finished our session with our power team member, we will address all of your questions then as well. So let's just jump into our update. So there's not a massive change from last week. As you can imagine, now that things are starting to get back to normal, and you know, kind of leveling everything out, everything is slowly and surely going back to a normal. But a short update this week, and then we'll jump straight in with our power team member. So from the surveyor side, exactly the same as last week. You know, from a local level, there really has been no change. There are lots more instructions coming through. We know from our update from last week that the market is really quite active at the moment in lettings and sales. You know, of course, those instructions have started to come through. Because of that, of course, as well, and the lockdown, there are delays and a backlog that the surveyors do have to work through, and because a lot of the surveyors that I work with are independent or smaller independent surveyors, they are actually having to rotate who is in the office and when. So we will have one surveyor out doing the surveys, for instance, and then one person in the office producing the reports. They are coming through. They are taking a little bit longer to get those reports back to us as the investors looking to purchase, but it is all moving in the right direction. They're able, obviously, with social distancing and wearing protective equipment, to do all of the surveys, regardless of what type of survey it is. They are still being told, the surveyors sit on, of course, panels from various different lenders, but they are still being told to assume a value from the 1st of February 2020, pre-pandemic. You know, many lenders with the residential side, so slightly different for commercial, but many lenders with the residential side, they're not expecting a change in values. They are, of course, though, still asking the valuer to give to predict whether they feel as an expert the market will change. Of course, at the moment, the surveyors don't have enough data to be able to predict whether there is going to be a fall. There is likely to be a fall, but at this moment in time, they are still assuming an evaluation from the 1st of February 2020, the pre-pandemic, which is is great. So that's for residential. From the residential properties side and the residential side, everything is expected to go back to normal and resume to its full strength. Lending isn't an issue. There's lots of lenders in the market, and that's pretty much just plodding along. From a commercial point of view, so our commercial surveyors they are worried. So our commercial lenders are worried as well. So they are proceeding with caution, let's say it like that. So a lot of the lenders are actually looking on a case-by-case basis, but they are expecting this sector of the market to drop. Of course, there's been, there's been a lot of negative impact on this side of the market with high street shops and things like that, and now with COVID as well. This sector has taken lots of hits over the years, and they are cautious now and looking at around a 50% loan to value. So they are moving forward with applications. They are looking at applications on a case-by-case basis, but valuers are looking, they are looking at this sector to take the biggest hit. So they are proceeding with caution. So the banks there to caveat that, of course, are only offering a much lower loan to value, because they are minimizing their risk as much as possible here. Now, with the commercial values as well, if you have a blue chip company, for instance, as a lease, then of course that is going to be looked at in a different light. But a lot of your smaller retail units and things like that are being downvalued at this moment in time. And that is likely to continue as well. So just to give you an example, actually, I placed an offer on a property that I'm looking to purchase, 2 commercial units and 6 flats. And speaking to my lender about obviously financing this particular project, because 42% of the revenue was produced by the 2 units the 2 commercial units, the shops, that they only would offer the 50% loan to value there. So, just as a real live example, then that was through Lloyd's. So they are going to be looking on a case-by-case basis. They are doing, they are looking at operational costs there at 30% as well. So they're deducting that from your annual revenue up front. So, and that's pretty standard anyway. But of course, that particular part of the market is likely to be affected. Lots of businesses have, realized now that perhaps they don't need offices or they don't need premises. They've adapted their businesses to work online. So there will be a lot of businesses that are going out of business as well. So of course, all of this has a knock-on effect. It's simple laws of supply and demand, and the values of those properties will drop, and confidence around those types of investments will drop as well, short term. So moving on to sales and lettings then. So from the letting side, as of, when I said to you last week, 5 lets last week, which is brilliant. That's continued through to this week with another 4 lets. So that side of the market is actually moving very well. There's no real change here if you compare it year on year. People are getting back to normal. Viewings are going ahead. Lettings and sales are open now for residential also. So all of that has obviously had a knock-on effect. People are back out viewing properties, looking to move, and all of that side of stuff. So a very good positive feedback from the lettings agency. Sales as well, the same, has gone mad. As you know, I made 3 offers last week. All of them went above asking price and went to best and final offer. So it's kind of like a bid off. You put your closed offer forward, and whoever's got the highest wins. So I haven't made any offers this week, so I can't give you any feedback on this week. But I am viewing a lot of properties at the moment, looking to place offers, and that is very much the trend that we're seeing. We're also seeing as well, you know, if you open your eyes and you're looking around as you're travelling about, and you know, when you're trolling through Rightmove, Zoopla, on the market, etc., you will start seeing a lot of properties that are sold subject to contract and let agreed. Now, of course, looking at the flow of that as well will give you an indication of the movement of them in that particular area for that market, and what people are buying and what people are renting out. So I definitely suggest that you jump over to there and have a look at that. Now, just as a side note, Rightmove actually do have a Rightmove hub where they'll give you local market indicators. So I think you do have to pay for this. I am part of Rightmove, so of course I actually have access to this. So I couldn't tell you exactly how much it is, but it's worth looking into. I don't get any referral fees or anything like that, so I'm not pushing this. It's just really good, useful information. We are looking at, you know, there's 5 areas this week that have seen the largest year-on-year increase over the last week. So that includes Canterbury, Northampton, Stoke-on-Trent, Bournemouth and Manchester, and a few other areas that are enjoying the jump, Wolverhampton, Dorchester and Steventon. And so, you know, it actually highlights the areas that are working well. So this is for sales and lettings, guys. So, you know, make a list of those areas that I've just suggested, and go and have a look at the research, look at the flow of lettings and sales in those particular areas, run some numbers, and if they meet your minimum requirements, your target audience, and profit margins that you're looking to achieve, then, you know, those are very good areas that have shown growth. So on to the broker then. So with the broker here, you know, they are still, like I say every week, and they always have done this, but they're a little bit more stringent now. They want everything. Lenders are asking for everything, including your inside leg measurement. So again, you have to have your proof of deposit, and you will have to show proof of that. You will also have to show 6 months worth of rent as well. So you are really having to show your affordability. Of course, if it's cash, it's completely different. There is no restrictions there at all, and much easier process. But if you are looking at lending, be patient, because it's not the broker's fault, and they are working with lenders, but all lenders now are asking for additional information, and they are changing the goalposts as they are moving along as well. So, you know, you may have spoken to your broker and they've said, right, this is all great, we'll put this all forward. The lender will look at the information that has been put forward, and then they will come back to the broker and request additional information. That is normal. So, you know, guys, be patient. The process is going to take longer. Lenders are nervous, you know, so be prepared to be answering additional questions and for this process to take slightly longer. And remember that with your broker, it is a relationship, and they are working on behalf of you to get the best possible deal for you, to move you forward. So just the message that I'm giving there is be patient. Now, in terms of the lending that's available right now, we have, you know, for buy-to-lets. So we still have Mortgage Works, TMW, we have Coventry Building Society, BM Solutions, and, you know, for your buy-to-lets area there are a few others that have come in, and there's some of the HMOs ones that I will go through shortly that offer products for both sides of that market. And all of those will do up to 75%, and you're looking at around that 4% interest, or up to that 4% interest mark. Now, if we are looking at, HMOs and buy-to-lets, we also have Paragon, we have Kent Reliance, we have Together, which are back in the market now, and we have West One. They are all offering up to 75% loan to value, and that is up to 75% loan to value. It will be based on the asset quality in the area, but that's the benchmark that they are looking to go up to, and they are looking at around 3.4 up to 3.99. There are minimum values that are required in order to get that, and we are looking at buy-to-lets at a minimum value of £75,000 and HMOs a minimum value of 100. We also still have foundation loans, which have remained in the market, and they are specialist lenders, and they do have a whole range of products. From this is just for England and Wales, not for Scotland, unfortunately. And but they will actually offer up to your 8 bed HMOs as well. So the previous Paragon, Kent Reliance, Together, West One are up to 6 for your HMOs with that minimum value of 100. With foundation loans, if you're looking to do larger HMOs, of course, you can use foundation loans there as well. And again, that's up to the 75% loan to value. Their interest range is around 3 to 7%, again, depending on the asset quality and the area. So moving on to the builder. Of course, there are delays. Again, be patient. We had a question come through that was saying, should I negotiate with the builder because my project isn't finished on time? I would say that no. I personally wouldn't negotiate with the builder. For those of you that watched last week's session where we had, the art of negotiation, we had Neil Barcher on, looking at the red table, blue table negotiation, a builder is definitely your blue table. You have an ongoing relationship with this person. You do not want to be cutting their, cutting down on their quotes and negotiating on that, because you will sever those relationships, and it's likely that the builders will just walk off site. It's not their fault that they are running behind schedule, and everybody else and every other builder is in exactly the same situation. And so I would say, again, be patient. This is something that's happened that we had no control over, and we will actually, it will resume back to normal once everybody has got rid of the backlog. Yes, just be patient is very much the advice there again. With materials, they're able to get hold of majority of materials now. Some materials are still quite hard to get hold of. Carpet shop seems to be a big stopper at the moment. So you know how if you are already an active investor, you will see that carpet day for us all is a very exciting day. That day isn't coming at the moment because it is quite difficult to get hold of the suppliers there. But other than that, carpets, blinds and furniture, majority of stuff is actually, we're able to get hold of, and builders are able to continue on as normal. Other than that, really, the backlog, materials and the delays, there is really no other update from the builder. They are back on site. They're adhering to social distancing. They can't have as many tradesmen on site at the same time. So they are having to work around that, again, causing a few more delays. But everything is plodding along and resuming slowly but surely back to normal. And then with our solicitor, we have a massive smiley face here, and the message was all good. So everything is back to normal. There is a small backlog there. Majority of practices are now open. All searches are able to be carried out, and overall everything is pretty much back to as it was pre-pandemic. So that's my updates for the week. Now, as you notice, I don't actually have a foreign exchange update. And the reason I don't is because this week we do actually have a very special guest. And so we have Nick Burns. Nick, are you there?
I am. I'm coming in. Hello.
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 So the guys don't get to hear me do the foreign exchange update, which is probably a blessing in disguise because I will never do it as much justice as you. But
not sure.
welcome to the webinar and my virtual sofa. Actually, I'm going to let you introduce yourself, but just this. Guys, this is Nick, is one of my favorite Power Team members, and I've known him for many years and had many clients that have worked through him, and he's always here with a smile on his face and good solid information for us to make informed decisions. So Nick, will you introduce yourself? Tell us a bit about yourself, your company and your background, and then what you're here today to talk about.
Yeah, perfect. Well, thanks for having me. It was an excellent update, Hayley. It was very good. I'm very impressed. So I run a foreign exchange brokerage, Lighthouse FX, and we specialise in helping companies and high net worth individuals to exchange currencies cheaply and with as little risk as possible. We put a lot of focus on as little risk as possible. I've worked with international investors doing property purchases in the UK for many years, and that's how Hayley and I met. So helped hundreds of, if not thousands of people do exactly this. So put a lot of work into helping and hand-holding individuals that are perhaps new, and this is perhaps a little bit scary, but I believe a very large part of what you guys are about to do. If I move on with some of my slides, so I'm here to talk to you about just an update of what's going on, right?
Right, so I'm going to say over to you, Nick, and I'm just going to turn my camera off so we can see all of your slides.
Okay, cool. I'll see you in a sec. So, as you can probably imagine, the currency markets have been going absolutely wild throughout the pandemic. We've seen really large swings. There were days where the dollar gained against the pound by about 10% in one day. It was truly unbelievable. I've never seen anything like it. And the reason for the shifts is that when the outbreak started, we saw a real high, really low appetite for risk. So investors were looking to put their funds into safe haven currencies like the dollar, the Swiss franc, and the Japanese yen. As we've started coming out, and nations have started coming out of the hibernation, there is an increased appetite for slightly riskier assets, and so we've seen currencies like SEK and Aussie Dollar strengthen quite considerably. But I'll show you in a moment some examples. But generally speaking, there's still a bit of fear. There's still a lot of the lockdowns have basically impacted productivity. So with everybody locked at home and not working, economies aren't producing as much as they once were, so there's a knock-on effect to the value of the currency. We've seen a real focus on infection rates, which is perhaps obvious, and again, that's something that we're going to monitor going forward, because the higher the infection rate, the more disruption in the country, and so it's having direct implications for the value of the respective currency. And as I say, as countries come out of lockdown, the markets are monitoring those infection rates, and also the appetite of the consumers to get back out and spend their money, hit the high street, or are they cautious? Are they keeping hold of their cash? Obviously, more spending in an economy, more footfall on the high streets will be good for that respective currency. So we'll be monitoring that. But also, there's this increasing concern for the amount of debt. So we saw a bit of a flip reverse at the start of the outbreak. Typically, if a central bank cut an interest rate or printed a load more money, we would expect that corresponding currency to weaken. But actually, what we've seen over the last little while is that action to support the economy has given investors a little bit more confidence. And we saw it yesterday as well. The European Central Bank upped their stimulus package for the coronavirus response by another 600 billion euros, and the euro shot up in value by about 1% against the dollar in no time at all. Whereas traditionally, that would have been like, oh my God, they're adding a large amount of debt to their balance sheet. That's a bit of a problem. But we're not seeing that at the moment. However, that is kind of going to turn around on its head, and that's what we've seen in the UK and the pound, is that now all of a sudden there's a little bit of a concern. We extended our furlough scheme, which essentially is the government promising to pay up to 80% of furloughed workers, so people that aren't able to work over this period. They're paying up to 80% of everyone's wages, and I think it was about 8 million people were on the scheme the last time I saw the figures. So, huge burden, but they extended it until the end of October. So 2 things associated with that, which is why we've seen the pound dip quite significantly since the announcement. First of all, the amount that's costing, huge amounts, 50 billion quid, something like that. And secondly, the fact that they now think that the disruption is going to go on until October, i.e. not everyone's going to be back to work until the end of October. So the pound's devalued. So we're keeping a real close eye on stuff like that. But yeah, so I would like to show you, actually, some of you have got some really fantastic opportunities. Not everyone, but some currencies have done really, really well. So one of them over the last few weeks is the Swedish krona. So this is a chart over the last year, and you can see mid-April, that's when this real solid trend started continuing. We've been on a winning streak, so you've gained about 8% in the last 5 weeks or something like that in that particular pairing. It looks really quite attractive for sterling purchases. So yeah, one for the Swedish guys. So Aussie dollar as well, I mentioned a moment ago, similar trend. So you can see about the same sort of time. That was when, I don't know whether you can see my pointer there, but just if you follow up just above sort of where it says April, you should see sort of that trend, same period, and Aussie dollars benefited really quite heavily. Quite a lot more going on with Australia, but yeah, we expect that trend to continue really for the foreseeable. And likewise, sterling Hong Kong dollar. Now, Hong Kong dollar is an interesting one because it's obviously pegged to the US dollar, which has been performing really quite badly since the start of the riots a week ago now. And so, yeah, that's broken higher. It's a new 3-month high, sterling dollar, and that's purely on dollar weakness. So that's, again, linked to the riots and the fact that social distancing is perhaps not being followed. So there's a higher threat of a second outbreak in the US, arguably. Secondly, Trump's handling of the riots has possibly not been the best. Staying out of that one. Possibly not been the best. So markets have now where he was odds-on favourites to win the election later on down the year in November. He was massively odds-on. Markets favour consistency, and he's been quite good for the economy as well. Stock market's all-time high, unemployment all-time low. But the odds this week have flipped. So now Biden is the favourite. And so the dollar's weakened quite significantly because markets would favour Trump to remain in. And we'll follow that one. That's going to be an interesting story. So I always get moaned at for putting charts on my presentations because people say that it's a little bit lost on them. And so I've put together a couple of just little examples of the cost variations since the mid-March outbreak or the start of the outbreak. So hopefully this shows you just how much the fluctuations in the market impact you. And although those squiggly lines might not have looked like much, they do represent quite significant moves. So sterling Hong Kong dollar, start of the outbreak, $1 million Hong Kong dollars at 10.25, bought £97,500 roughly. Today it would buy you an additional £5,500. So again, a really quite considerable difference. But the bigger gains have been Australia and SEC. So Aussie dollar, start of the outbreak, 200,000 Aussie at 206, bought just over 97,000. But today it would buy you an additional £12,200. So a really, really big difference. And although I think that trend looks very likely to continue, that's the kind of difference that you can't really sniff at. And I would argue that there's definitely some advantage in taking some pounds if you are a holder of Aussie dollar at the moment, and start chipping away really, because that's a really significant gain. So sterling SEC as well, start of the outbreak, a million SEC bought at 12.62, bought just over 79,000. Today it'd buy you an additional £6,000. So again, you know, a really large move. It's another pair that I think is going to continue to get better, but again, significant move. And if you've got a very low, you know, if you've got a lower appetite for risk, these are the kind of levels that you'd be targeting. And actually, it's dipped a little bit lower than that since I did these slides. So the last couple of days, it's dipped a little bit lower. So trading in the 11.57 on the screen at the moment. So quite a lot lower again. I'll fly over these because I know a lot of guys know me and are aware of some of the tools that we can use. And obviously, if you wanted to explore them in a little bit more detail, then happy to. But I wanted to focus on a kind of update really today. But a few different mechanisms that we can offer you the functionality of. So spot deal would be a very simple buy now, pay now. Nick, I want to buy £100,000 selling Aussie dollar. What's your best rate? Yes, please. Buy now, pay now. You pay me in a couple of days. It's really, really simple. A forward contract is today's rates for a future date. So you could say, Nick, I really like this rate at the moment. I think I'm going to sell some of my SEK and buy pounds because I like the rate. But I'm waiting for a property sale in Sweden to go through, so I've not got the money to buy the pounds outright. But I want to reserve the rate and set that as my costing level as a fixed rate. So eliminating the foreign exchange variable. Then you can do that with me. Today's rate for a future date, we agreed to buy £100,000 selling SEK for delivery and anything up to a year. 2 or 3 months I would recommend at the moment because who knows what's going to happen. 2 or 3 months. You pay me a 5 or 10% deposit, and you know exactly what you're going to get on maturity. You just owe me the remaining 90% balance on maturity, and you know exactly what the rate's going to be. You've got no risk, and you can kind of rest easy in this crazy market. But one that we're using quite a lot at the moment, with markets going down, and everyone always wants to try and execute right at the bottom. What we're doing is automatic stops and orders and triggers. That works on both sides of the market. So in the current stage, what we're doing at the moment, a lot of stop losses. So if the market's coming down like this, everyone always wants to continue and see how far that trend's going to go. And as I say, I think there's a little bit more to go. But let's just say, for some minor miracle, we get a Brexit breakthrough, as was rumoured earlier in the week. The pound would surely rally, 5 or 10% within minutes, hours, days. So that's really what we want to avoid. So we can put a stop loss in at just above where the market's trading, so that it's not going to trigger if the market continues its trend. But if we do get an all of a sudden announcement over the weekend or overnight or whatever it may be, we know it's going to protect us, and we're not going to face the worst of the pound's strength. So that's a really good one at the moment, and one that I would be keen to explore with a lot of you guys. So hopefully that makes sense. Obviously, I can go over things again if I've not been clear. So what are we monitoring moving forward? So as I said at the start, so infection rates are a big one. I was on a call yesterday, and someone kind of said to me, well, look, you've spoken a lot about COVID-19 and the coronavirus pandemic, but what about all of the other stuff? Well, unfortunately, the main thing at the moment is really the infection rates and economic performance, unemployment figures, and stuff like that. And it's all linked to COVID-19. Unfortunately, it's a horrible subject, but it is driving markets at the moment because it is just the main focus. Just is what it is. Central bank intervention, as I said earlier, it's the tide is going to start turning. Markets aren't going to continue to favour increasing central bank debt, government debt. They're not going to favour negative interest rates necessarily forever. So we will be watching what the central banks will be doing, and traditionally central bank intervention was kind of like the main market driver. So big things, all the comments from the Fed, Bank of England, everything like that, which you need to be on top of, or we will be on top of. Another interesting one, US-China relations. You might think, if you're from Sweden, that this doesn't affect you, but unfortunately it does. It's going to have implications across the board, and that's linked to risk appetite. Two world's largest superpowers and economies arguing, and trade tariffs, and obviously linked to COVID-19 as well now, with the China being the kind of epicenter. There's a lot going on, and if as appetite for risk increases, we would see the dollar weaken and other currencies like Aussie and SEK increase in value. But if tensions rise, we would expect to see investors go back into the dollar as a safe haven, or into the Swiss franc and yen. And that would be bad for the vast majority of you guys. So it does have an implication, quite a large one actually. Economic performance indicators. So obviously with everyone coming out of lockdown, we're looking at stuff like how much has the lockdowns impacted the economies? How strong are they now? Are they back to work? Are they still furloughing large amounts of people? The behaviour of the public is going to have a big one. High street footfall. Are people going out buying? Are they spending their money? That would be good for the economy. Consumer appetite as well. Are they making big purchases, or are they only making small purchases? car sales, stuff like that. Or people, if someone goes out and buys a car, it says to the market, if car sales shoot up, it says to the market that people are willing to make that big sacrifice, big kind of risk almost. And so it implies that they've got more cash and the future's more rosy. And so that will boost the pound or the corresponding currency. And another one as well, adherence to social distancing. So I mentioned the riots in the US earlier. We've had a few protests in the UK as well, but there's been a lot of imagery of people hitting the beaches and not following social distancing, and the governments almost internationally really have warned about not following social distancing, the risks of a second wave, which would be almost catastrophic to almost everyone, I would argue. So a kind of loose view on social distancing measures will be followed as well. And of course, our friend Brexit is coming back to the forefront, as painful as that is, but it's going to be a driver for the next 6 months. We've got a deadline at the end of the month for the UK to officially request an extension to the deadline of the end of the year, which I would argue is almost certainly not going to happen. So we would expect to see some pound weakness toward the end of the month. But negotiations, we're finishing up the fourth round of negotiations this week. There was a rumour that there was going to be a breakthrough, quickly squashed. It's kind of standard now. We go through this roller coaster of there's going to be a breakthrough. No, there's not. There's going to be a breakthrough. No, there's not. But it's going to affect the pound. And when I always say, so June 2016, when the vote was cast to leave, the pound lost incredible amount of value and is still limited. I would argue its upside is still very much limited by Brexit negotiations. But we could in theory have a breakthrough at any moment. I'm not holding my breath. I think it'll go right to the end. But there is a real risk that if you're sitting and doing nothing with currency, and all of a sudden we do get a breakthrough there, there would be a really sharp, swift move. And if you're not in a position to take advantage or protect yourself, then you need to consider it. But yeah, that is about the end of the update. So I guess I don't know whether Hayley can come back.
Hello.
Hi.
Thanks for that, Nick. So a really good overview there. So guys, if you have any questions, please feel free to pop them in the chat box. So very much the message at the moment then, Nick, is to take advantage.
I think take advantage, but I think what I would say is get in a position to act in advance, because we as you know, we need to do compliance before we can do anything together. So I would say this is a time for getting prepared, because we could see really sharp movements against us at any moment. And if it does start to turn, you don't really want to go through a 5-day compliance process because you might have missed it. So I would say have things in place, and yeah, I mean, if we can follow the trend down, great, but just be prepared in case,
Yeah, brilliant. Okay, so in terms of getting prepared then, so majority of the people will actually have their accounts open with you. But can you just quickly talk us through the process of getting obviously prepared, your account open, and what you need from the individuals in order to action that process?
Yeah, so compliance starts with an online application. It's completely free, by the way, and no obligation to trade. We just can't trade without completing it. And we will then need to verify in line with regulatory requirements. We need to identify the individual, so passports or the shareholders, I should say. So anyone with a 25% or above shareholding, we need ID from them. We need to evidence proof of business, because a lot of these businesses are going to be brand new. We need to evidence proof of business. We need to evidence source of funds. So, and once we've done that, the account's open. But then as far as getting prepared for market movements, I really suggest stop losses at the moment. So running a stop just in case the market jumps up, it will automatically trigger and protect us. That's what I'm encouraging at the moment, because it does look like the pound's going to get weaker.
Okay, I know you asking. I'm asking questions on behalf of other people here that have just general questions that come through to me. Are you asking for proof of trading activity, or when you say proof of business, can you just explain what that means?
Yeah, apologies. Yeah, so obviously with a lot of the companies being brand new, they're not going to have any invoices or trading history. So in order to verify that they are, what we need to do is we need to say that these guys are actually going to be buying a property in the UK, and we need to be able to evidence it in case the regulators come in. So at this point, the most likely invoice that you're going to have, if any, is going to be from a sourcing agent. Literally, you know, the 200, 300, 400 pound, whatever it's going to be, invoice to say we're going to look for a property from you, and we can accept that as a statement of intent, essentially, and then that gets us our tick.
Brilliant. So guys, those of you that have done sourcing days or discovery days, orientation days with your sourcing agents, ask them to obviously, well, you should have had an invoice anyway, and that would actually be sufficient for Nick. If you struggle with that, get in contact with us. I'm sure we'll be able to sort something out for you. Am I allowed to say that?
I didn't hear it. No.
Okay. You know, and in terms of that process, Nick, how long does it take?
Well, yeah, unfortunately at the moment things are a little bit up in the air. I mean, we try and give a guidance of 5 days to manage expectations. It can be done within 24 hours, can take a couple of days, but I set the expectation at 5 working days. So please don't leave it to the last minute and say, Nick, you know, I need pounds tomorrow, because it's just not going to happen. Yeah, we advise 5 days.
Brilliant.
It depends as well, obviously, how quickly you can get the documents to me. You know, if you can get it to me in the first hour, then it's going to speed the process. But
and
yeah.
Another question I get asked, and I know the answer to this, but I'm obviously going to let you talk from your point of view. A question I always get, not just to you as part of the Power Team, but all of our Power Team members: do you need the ID to be certified?
No, we don't. But we actually prefer it not to be. So it just needs to be a copy of ideally this day and age. Take a picture on your smartphone, send it to me directly. That's the best way of doing it. Yeah, but password protected we recommend as well.
Brilliant. So I've got a few questions here. So hi, Hayley and Paul. Honestly, I should choose my. Honestly, how should I choose my foreign exchange company? So this would be a good one for you. Obviously, you know, Legacy have introduced you to another foreign exchange company, and obviously Asset Academy as well, through various different mentors. And that's right. As you know, myself and Nick used to be part of Legacy, never part of Asset Academy, so since the changeover. But there are many foreign exchange brokers out there. So what sets you apart from the rest, Nick? No pressure.
Well, yeah, absolutely. It's interesting because I used to work for that company. Jenny, I used to work for that company as well.
That's how we met, isn't it? Me and you.
Sorry?
Well, that's how we met.
Yeah, absolutely. Yeah. So that's many moons ago, right?
Yeah, many.
So yeah. I don't even know how long, but so look, being honest with you, I mean, there's very little difference on price. If what you're looking for is price, there's very little difference between any broker, foreign exchange broker on the day. What we do and what I do is I've always focused on this exact type of transaction. So we can help you with the compliance implications. We can hold your hand more than perhaps somebody that's not used to dealing with people that haven't got experience with the foreign exchange markets. So that's really where we come in. I kind of get it a little bit more than I like to think. I get it a little bit more than most people in my world. And this is, I speak to hundreds of people doing exactly this. So it's so I like to think I'm slightly better positioned than most others.
So I'm going to answer that question as well. As Your Freedom Empire, how we choose our power team is based off various different factors. So experience, knowing that person, having worked with them for many years, understanding their customer values, and how they will work with you as internationals. And the reason Nick is part of our power team is because his customer service is second to none. You can pick up the phone and have a conversation with him and, not know anything about it, foreign exchange or, how to put yourself in a better position or anything like that, to understand the process, which is, it's quite difficult to understand if it's new to you. And Nick will, as he said, be there to hold your hand. So we very much, look at that type of nurturing, protection, but also delivering as well.
That's very kind. That's very kind. You did much better than me.
Practice. You are my favourite power team member. So we've got Fabrizio here. What I like very much from Nick is the daily update. Very useful. Thank you. Fabrizio is obviously a client of mine and yours, and he's a very happy customer. But guys, I've worked with Nick, like I said, for many years now. It's at least 6 or 7, isn't it?
Gotta be.
And I've sent many mentees through to him to international, of course, and I've never had a problem, not one time. So if we look at past record, customer service, and delivering what they say they are going to deliver, that's why they're part of our power team. And
I'll do my best.
Yeah. So guys, I can see that at the moment there's no other questions on there, so I'm going to jump to the questions that are sent through to me. These are probably more property related, but if you want to give a jump in, you're more than welcome to.
They've probably seen enough of my face, so I'll do them a favour and I'll disappear.
You don't have to disappear, just in case any more foreign exchange questions come through. You're definitely the guy to answer.
I'll linger in the background.
Okay. So guys, if you have any more questions for Nick, please, we will get Nick's details sent through to you. Those of you that want to get in contact with Nick, we can, of course, put you in contact with him as well. Don't worry about that. Just a few questions then, guys, that have come through to me. If you have any other questions now, please feel free. Oh, we've just had another statement come through from Ben Cullen here. Can I just say that I have been dealing with Nick and his communication is second to none. Guys, he's... for those of you that have done mentorship with Your Freedom Empire or with me as your mentor...
Thanks, Ben.
you will know that the people that we put you in contact with are the best in their field. That is what we do. That is, we only introduce you to people that we are happy to work with ourselves as investors ourselves, and people that we've used for many years. So you actually get our power team. Now, Nick, I always say, is one of my favorite parts of the power team, albeit I've never actually used him myself, as in I haven't transferred large amounts of money to Nick, and I don't trade in currency, so I've had no call to actually use his service personally myself. But he's the only one in the power team that I haven't. But everybody else, that I have put through to Nick, I've never ever had one issue in 7 years. So that's pretty good record, that is, Nick. So a few questions then. I had a question come through and it said, what property types? So rent to rent and lease options seem to be what lots of people are WhatsApping me about at the moment. Now, rent to rent, of course, is going to be a very good strategy right now in the current market. It's something that, whether you are brand new starting out, whether you have small amounts of capital or large amounts of capital, it's a very good cash flowing strategy. You don't own the property at the end of the term. You control and manage that property, and you make cash flow out of that. So, what a lot of people are asking me is what type of property fits the rent to multi-let strategy? Because, of course, we can do rent to rent, adopting multi-let, HMOs, serviced accommodation, hot desks, commercial hot desks. There's loads of different strategies that we can apply to this. But rent to multi-let, you are at least looking at 2 or more bedrooms with 2 or more reception rooms, and you want that to be a minimum of a 4 person multi-let. If you can't do, unless you are adopting the serviced accommodation, you can't do a studio flat because, and I wouldn't recommend doing a studio flat anyway. They can be really quite difficult to get a higher profit margin there. So I would say to you, at least 2 or more bedrooms is the answer to that one. Another question on angel investors, and again, I get asked this quite a lot, and angel investors is another really good thing at the moment that most people are going to jump on. So really be prepared, get your angel document in place, understand your unique selling point, what you are offering to your angel investors, put deals in your proposal as a replica of what you are looking to do, or deals that your team have done. So ask your mentor or your network, download your deals from your sourcing platforms, or get them direct from your sourcing agents and your networks, and put examples of these in your angel documents as well, because at the moment, as Nick was saying, of course, we're in a negative interest rate there, so it makes no sense at all to have money in the bank. So you will have a lot of people with cash in the bank now looking to invest it elsewhere. And a lot of them will look to invest it in property or with an expert. So, some people will want a joint venture, which is fine. And some people will just be quite happy to be an angel investor and get between 6 to 12% interest there over an annual period. So definitely angels are really good to target at this moment in time, in no better time really. Okay. And then I do have a few other questions here. I'm just highlighting ones that might actually be. So I've had this question before, but it's been sent through to me by someone else, so I'll answer it again. So this question is, should I use a sourcing platform as an international? Now, as you know, as part of our training and our mentorship programs, you get access to state-of-the-art sourcing platforms, their investors, and you also get access to our sourcing agents as well. So independent lists and, of course, your online platforms also. So the platforms are created, and a lot of sourcing agents will use platforms. Not all of them will go to platforms, and you don't have to use a platform in order to invest here in the UK. But what the platforms do is they verify the sourcing agent. So the platforms will, make sure that they have the correct insurance in place, make sure that they are registered with HMRC, make sure that they are registered with the TPO and the PRS or the PRS. They make sure that they've got their anti-money laundering, they're registered there as well. So there's lots of checks. They also make sure that as an international, and this is more important for an international than a UK, that the sourcing agent is not only sourcing the deal. Because we can find loads of sourcing agents. We can check them out. A sourcing agent can get compliant within, 48 hours, and they are done. They're classed as a qualified sourcing agent. But that doesn't mean they're a good sourcing agent. A sourcing agent can just source you the deal, and that's their job done. But as an international, that is useless to you. There is no point in having the deal if there is no one there to exercise that strategy for you. So what the sourcing platforms do, and any sourcing agents that we at Your Freedom Empire introduce you to, they have to have a one-stop shop. They will have, they will be able to do the project management. They will have their refurbishment team, their build team. They will have local experts, HMO, building regs and things like that. They will also have sales and lettings, so they can fully take you through the life cycle of that investment, from sourcing to renovation to refinance to tenanting and to selling if that's what you choose to do. So the answer is no, you don't. But what the sourcing platforms do encourage is good behavior. So, you know, there is, of course, there are escrow systems and things like that in place to protect you as the investor. So I would say if you are international, just starting out, you know, and you're looking to work outside of a platform, then of course there's nothing wrong with doing that, but you do have to do certain checks on the person that you are working with prior to actually parting with your cash. And you know, if you are interested in how to protect yourself, then you know, maybe let me know in the questions box here, in the chat box here, and I can do a whole session on how you actually check out the people that you are working with, the companies that you are working with, the sourcing agents that you are working with, what they have to have in order to be compliant, and how to protect yourself and the agreements that you have to have in place as an investor to protect you moving forward with that particular individual company or person. So hopefully that answers your question. And then Nick, are you still there? Is he still there?
I am.
Yeah. So Nick,
hello.
I can see there's no other questions coming through. We're coming up to about an hour, so I think I'm going to just pop onto our website update. So I just want to say thank you ever so much for your time this morning. It's always a pleasure. And the guys says that, you know, as you can see, you're very well received, and they're actual customers that are talking here in the chat box saying how great you are. So that's awesome feedback, guys. Keep bringing the love. We like that.
I really appreciate it, Hayley, and to everyone. Really appreciate your time and for having me. And for those that, you know, that are beginning your journey, I wish you all the best, and I hope you're very profitable. I hope your adventure is a successful one.
Brilliant. So thank you ever so much for your time, Nick, and I'll probably speak to you again next week before the next update that I have to give. I'm sure it won't be as in-depth as yours, and I don't do it anywhere near as much justice. But
I'm sure you do. I'm sure you do.
I'd probably cringe if you listened in on what I say.
I don't know. I thought it was really good. I thought the start was excellent. All of your updates from all the different things. I thought it was fantastic. It was really, really insightful.
Bless you. Thank you ever so much. Well, it was a pleasure. Enjoy the rest of your day. Have a great weekend, and I'll chat to you next week. Take care. So
Thanks,
everybody say thank you to Nick, and we'll see you soon, Nick. So
thanks
guys,
very much. Bye-bye.
Bye. So guys, I am going to go on to, of course, if you don't have any more questions, if you do, now is the time to pop it in. So just our updates then for our website. Of course, we are Your Freedom Empire. We do lots of online training now, including online mentorships, virtual mentorships there. There is no compromise. It is exactly the same as a live mentorship with your chosen mentor, power team, sourcing platform, escrow systems, and much more. So you know, guys, have a look online at the training that we do. We have adopted all of our courses now as well, so that you can actually take them online. And we also not only look at property investment, we look at business, we look at negotiations, we look at communication, we look at health and wellness, and mindset. So there's lots and lots of free information on our website as well, so you can sign up to our free resources section. Of course, we run these webinars on a weekly basis also. And we are going to start doing them more interactive as well, so it will be more of a networking event for all of us. Of course, guys, we have another new course that is coming live, and this is Property Renovation 101. This is going to be run by the lovely Glenn Newson and Craig Tarr. So they were talking to you all about distressed property, and what you need to look out for, and the tops and the top tips around that particular strategy and how to be successful within that strategy, especially in this market now as well. So guys, have a look at that, and that is will be live soon. Then, of course, we also have our property training tracks. Now, these have actually been put together so that, to suit various different people starting out. So whether you have, no capital available and you're looking for a creative finance type of strategy, or strategies that work well, or you maybe have the money but not the knowledge, or you just want the full shebang. So we've put different tracks in place here based off individual situations and feedback from you guys, actually. So they're very well priced, excellent value for money. So go and have a look at what's included, and I'm sure you will agree with me. We also do these property training tracks as well online. So we have online versions as well. So majority of our training now is you can do either a live in-class mentorship or training, or you can actually do those trainings online, and there's no difference in terms of the delivery. Okay. And of course, again, like I said, we have our property wealth mentorships that are live, so that we are famous for our wealth mentorships, and many of you that have been mentored by us can vouch for that as well. There's many testimonials and things like that on our website, so go on, have a look, and see what we're all about. And of course, guys, these calls are going well, and I can see there's actually a few of you that are on the call now. That we had calls this week and last week, actually. So if you want a free consultation call, and there's no upsell, and those of you that are on the line can verify that, there is no upsell. It's not a sales call. We're not going to flog you a course at the end of it. It is genuine giving back, helping you in this difficult situation, and a thank you from us for listening. So guys, if you have a certain situation that you are in, a question that you want to ask that you don't want to ask in this type of forum, or you just want to chat about property, it's absolutely fine. It will either be with myself or one of my mentors at Your Freedom Empire. We will sit down with you for 30 minutes and look at you, your situation, and answer any questions that you may have. We have helped many people over the period of these 10 weeks now, and I'm actually going to miss doing this, actually. So eventually we will have to stop, I suppose, but my time has been, a lot of my time has been invested in these calls, and it's been an absolute pleasure. So for those of you that are on the call today, that are listening in, thank you for all of your great questions, your funny jokes, and great sense of humour, and hopefully as well, I have helped you in the sticky situations that you may have. Hi from me and Laura. We were just out of curiosity. Nice content. Hi, Fu Chang and Laura. So these are my mentees from quite a few years ago now, actually, living in France, I think, if my memory serves me well. So guys, book into a call, if you want that free session, and it is genuine free. I know that there's a lot of webinars that are out there that are pushing sales. We give you updates on what we are all about, but actually the people that have come through our training sell for us in terms of their word of mouth is the best form of advertising. There's nothing like that at all. It's genuine help. Then another one as well, as you can see, I get loads of questions. I don't get a chance to go through all of them, but guys, if you have questions and you're not able to make the call, I know a lot of people actually come through going back to work now. So for those of you that can't actually make the calls live, it doesn't matter. We put this video on YouTube, so you can visit our YouTube. Make sure you like and subscribe, and I want to say thank you to you guys that left messages as well on there. It's really good to have comments and likes and new subscribers, so keep up the good work. I really appreciate that, and thank you very much for the good feedback. If you see value, guys, please please pop onto our YouTube channel just so that other people looking can see that, you know, these are useful sessions. We've got 10 weeks or 11 weeks now of different subjects each week, and all very good value, and moving you forward or answering many questions that you may have. So guys, if you can't make it, don't worry about it. We can still answer your questions. Pop your questions through to admin@yourfreedomempire.co.uk and pop webinar questions on there as well. And if you do want the free call, again, through to pop an email through to admin@yourfreedomempire.co.uk and pop in the subject box there, free call as well. And for those of you that have asked for Nick's details, just pop an email through to admin@yourfreedomempire. It will be forwarded through to me, just asking for the foreign exchange broker that was on this morning's session, and that is Nick Burns. Okay, and we'll get that sorted out for you. So guys, I think it is, oh, thank you, Ika. So we had a really nice conversation this week, lovely. We've got Zemar on here saying, thanks a million, Hayley. I will drop you a line for the next free 30 minutes. It was lovely to speak to you, Zemar, as well, and more than happy to do more than one call as well. So guys, just book those calls in. It's excellent. So it is that time of the week. I am actually going back into the office today. I'm not sure how I feel about that. I popped in there yesterday to make sure that all of the staff we were bringing back off furlong had all of the protective gear. The desks were all in the right order and things like that. It was really surreal to actually be in the offices, because it's huge offices that we have for Your Freedom Empire Hub, our head office. And you know, walking around this huge building with nobody there was really quite I just didn't like it at all. Those of you that know me, I love people and I get a lot of energy from other people as well, and hopefully give that also. But today we will have some of our staff that are coming back. So I'm actually heading off now to my first meeting. So live, which is, I'm probably going to have to wear all of my protective gear, but wish me luck. But guys, thank you for your time this week. Thank you to Nick again. He's always a pleasure. Absolutely love him. A really good, genuine guy, and that's what we're all about. Good, genuine people, introducing you to people that will take care of you, and they won't take advantage. People that we've tried, tested, and worked with for many years, and that is very much our motto. Good, introducing good people to good people. That's it. So guys, thank you ever so much. Like I said, pop onto our YouTube channel, like and subscribe. Really appreciate it. Drop a comment there if you found the session useful. We will see you again next week. Please also pop through comments about, you know, pop an email through to say what it is you would like to get out of these sessions. So over the weeks, we have done negotiation, we've done planning, we've done councils, we've done we've done foreign exchange, we've done social housing, we've done distressed property, and we've done general questions answers as well. So if there is specific subjects that you would find very useful in your journey, pop an email through to admin@yourfreedomempire.co.uk, and I'll make sure that we do cover a session on that particular topic. But thank you again, as always. It's always a pleasure, guys. Enjoy your Friday and have an awesome weekend, and I will see you again next week. Goodbye for now.